Welcome to another S&P 500 analysis. Today is April 22nd, 2022. Ever since the bearish weekly evening star pattern had triggered, nasty selling storm hit the S&P 500 and the stock market. So when will this storm end? In this video, we'll look at the market sentiment, the market internal, the price action of the S&P 500, and the other major market indexes, the 10-year yield, the US dollar, oil, gold, and the silver market, and see what they are telling us. We will also take a look at the two heavily weighted FANG stock, Apple and Tesla, and see what they are telling us and how we can use the message from the market to help us shelter from the storm. Stay tuned. Now, before I begin, I need you to take a moment and click the thumbs up to help me promote this video on YouTube. In addition, be sure to watch my video on the 7 market indicator if you are unfamiliar with the market internal and the market sentiment indicator that I will cover in this video. I have placed the link in the description below, and I will also have the link at the end of this video. Now, looking at this weekly chart of the S&P 500, as you can see, the range have expanded quite a bit compared to the past couple weeks. For this week, the range was 245 points, and it lost 120, almost 121 points, or 2.75% for the week. And also printed out a engulfing candle here. We call it outside bar, and it is continued to do one time framing down, and also it is closed below this 10-week moving average and also this 40-week moving average, as well as closing beneath this price channel. Remember, we talked about this evening star pattern, and it was triggered last week, and now this week we saw the follow through on the downside. Watch this low for next week. Take out this low here. We could see it come down and test these low for it come down and take out this low. Remember, we're still waiting for a negative divergence between the cumulative AD line and the S&P 500 to get resolved. And we'll take a look at that when we take a look at the market internals. All right, let's take a look at the sentiment chart here. As you can see, the VIX came back up and getting close to this 30 level. Finished on Friday at 28.21, and also you can see that throughout the week it's been inside of this 20-30 zone. And the other thing is the put call ratio, it got above 1 now, so there are a lot of people being quite bearish and buying put. And here, as you can see, on Friday the S&P 500 was down 2.77%, 121 point. Thursday it was down 65, almost 66 point, 1.48%. And notice the up-down volume ratio was 5-to-1 in favor of the down volume on Thursday, and 7-to-1 in favor of the down volume on Friday. And throughout the intraday, there was actually close to 9-to-1 on the downside. And looking at the daily advanced decline, notice on Thursday, there's over 2,000 more declining issue than advancing issue. Likewise, on Friday, it was 2,272 more declining stock than advancing stock on Friday. So looking at the up-down volume ratio and also the daily advanced decline, we could see that on Thursday and Friday, it was a broad market decline. And later on, we're going to take a look at the heat map, and you could see how broad that decline was. And here on the new high, new low, although the new high came up a bit, earlier in the week, even on Thursday, it was 171 new 52-week high in the New York Stock Exchange, and 252 stock made new 52-week low. But on Friday, notice on Friday, there were only 19 stock make new 52-week high, and more than 414 to be exact, that made 52-week low in the New York Stock Exchange. So the net difference between the new 52-week high and 52-week low was 395 in favor of the 52-week low. And you can see that the cumulative advanced decline came down. And right now, we're still looking for this negative divergence to get resolved. We are looking for this low to get taken out. And here, looking at the Nasdaq down volume ratio, we also saw quite bearish on Thursday as well as on Friday. It was 2.5-to-1 in favor of the down volume on Thursday, and 3-to-1 in favor of the down volume on Friday. But the daily advance decline on Thursday, there was actually more declining issue than on Friday. It was 2,687 more declining issues than advancing issue on Thursday. And on Friday, there were 2,422 more declining issue than advancing issues. And again, the new 52-week high versus new 52-week low kind of tell the story for the Nasdaq market. As you can see, even though it came up a bit, throughout the last couple of weeks, but again, the new 52-week low is much higher than the new 52-week high. On Thursday, there were 100 new 52-week high versus 483 new 52-week low. And on Friday, there were only 42 new 52-week high versus 633 new 52-week low. So for a net difference of 591 more new 52-week low than 52-week high in the Nasdaq market. And here, as you can see, the cumulative advanced decline line for the Nasdaq market put in a new low today. It took out this low, while the Nasdaq 100 is still above this low. So we could see the Nasdaq 100 come down and take out this low. So just keep an eye on it for a potential new low on the Nasdaq 100. So as you can see, for the sentiment and the internal, it's certainly telling us a picture of bearish and fear coming back into the market. And as you can see from the VIX and also the put call ratio, it's telling us that the market participants are getting quite fearful and also getting quite bearish. Okay, let's take a look at the price action of the indexes, starting with the S&P 500. We'll continue to use the weekly chart instead of the daily chart because we basically want to look at some of these key levels in this major trend here. Remember last week we were talking about this 382 at this 43.83 level to see what it hold this level and see would it be essentially chop around inside of this zone here, right? This retracement zone. And if it doesn't, we're essentially looking for the price to come down to this 4,300 level. And as you can see, as of Friday, it came down and tagged that 4,300 level and closed at 4271.94. So for the coming week, we continue to monitor for continued downside. And remember, we said that if it doesn't hold this 4,300 level, then we'd be looking at these low here. Okay, and these low essentially. This level here is 4222.62, and this low here is 4157.87. And these low doesn't hold, then look for this February low at 4114.65. And that's basically what we want to see is to get this low tag, because remember, we still have that negative divergence that we need to get resolved between the S&P 500 and the New York Stock Exchange cumulative AD line. And that's how we're going to get that resolved, by coming down and test this very low, 4114.65. Now, if it decide to bounce off of this 4,300 level next week, then look at this zone here, this 50 and 382 zone between 43.83 and 44.66. Most likely it will come up and chop around here. If it is strong enough to push up, then once again, we're basically looking at the 618 at 45.50 area and also in confluence with this trend line. But most likely, I think the bias right now is still on the downside. And as of Friday's close, the S&P 500 is officially re-enter the correction territory because it had tagged in minus 11.31% from its high. So anything greater than 10%, and it's a correction territory. And when it get down to 20% or more, then we'd be basically talking about bear market. But right now, if you want to categorize the stage where the market is, or the S&P 500, then it is in a correction stage, in a correction territory. And for the Nasdaq 100, remember Nasdaq 100, we're saying that we'll see, would it be able to come back up and bounce against this 382 at 14,396. If it continue to move down, we're essentially looking for this thing to come down toward this low here at 13,026 area. So as you can see, last week it made its move on the downward side and it's getting close to this level here. So for the coming week, we'll continue to monitor for further downside and possibly come down and tag this low here Now, if it decided to bounce back once again, we'd be looking at this 14,396 as potential resistance for back testing, because you also got this trend line coming down. So it's pretty much in confluence with that, because we got this 38.2 and 50% retracement zone over here. Okay, now as of Friday, it closed with a negative 20%, a little bit over 20%, 20.33% from its high. So officially, right, based on the definition of a bear market, anything greater than 20%. So officially right now, the Nasdaq 100 is in a bear market. And now look at the Russell 2000. Remember the Russell 2000 was saying that it's still inside of this zone here. And essentially it came up and got rejected up here. We are looking for the Russell 2000 to retrace back to the bottom of this balance area and essentially come down to this level near 1935. So you can see that it came down to this level on Friday and sort of tagged this, checking at this level. So next week, we want to watch to see would it be able to get a bounce back up and maybe come up to this 2075. But if it break this level, break away from this balance area, then we essentially are looking for this thing to come down to the 1750 and 1725 level. Now, as of Friday, it is in a bear market as well because it lost 21.07% from its all-time high here. So officially, it is in a bear market. And for the Dow Jones Transportation, remember Dow Jones Transportation, the prior week we saw an inside bar here, that come up and we say watch the high and watch the low. If it break the high, then we essentially, we'll see would it be able to come up and tag this 15,067. And then if it moves through this level, we're essentially looking at this 382 at 15,705. As you can see, it got rejected up here and got pushed back and closed right near this 15,067 on Friday. It closed at 15,067.34. So for the coming week, we'll see would it continue to come down and take out this low here, essentially to come back down and retest this low at 14,133.59. Or would it continue to push and this time maybe it will be able to get above this 15,705 and come up to this 50% retracement at 16,190 and also in confluence with this trend line here. And as of Friday close, it is only down 17.53%. So it is still in the correction territory. It hasn't entered the bear market territory yet. And here looking at the Dow Jones Industrial, we see the Dow Jones Industrial booked through the retracement zone. It did come up and try to peak above the 618 at 35,165 area, but was unable to stay above that, and unable to stay above this trend line. So you can see that it is coming back down and broke this 382. So right now, we're basically watching for this trend line. If it doesn't hold this trend line, then we're basically looking for the Dow Jones Industrial to come down to this 32,273 area and possibly come down basically to this 32,000 level. And as of Friday's close, it's only down 8.54% from its high. So it's basically categorized as in a pullback stage, not even a correction stage yet. And here looking at the New York Stock Exchange Composite, the broader market index, here we see, remember we say looking at this thing coming back into this balance area, and we're essentially looking for this to retrace back down to this 16,094 area here. And you can see on Friday, it came down and broke below that level. So right now, we're essentially watching this 15,775, see would it be able to hold this level. And if it doesn't, then we're essentially looking at these lows here. So basically on Friday, as this closed, it is down 7.98% from its all-time high here. So it is still in a pullback mode, in a pullback stage, just like the Dow Jones Industrial. And if it continue to push up, let's say we get a bounce off of this 16,100 level next week, then look for a possibility of coming back up toward this 16,932, bouncing around inside of this retracement area, this consolidation zone or the balance area. Okay, so that's basically the indexes. And here, as you can see on the 10-year yield, almost got to that 3% that we're looking at. We're hoping to see that 3% get tagged this week, but it got up to 2.95, and that was the high, and then it pulled back a bit. But we're still maintain to keep an eye out for this level here at 3%. And here, looking at the US dollar, remember last week we were talking about the dollar and look for that 101. And on Friday, we actually saw this went above that 101. It closed at 101.215. There's been a tag on that 101 for a couple of times throughout the week, but I was unable to close above it. So today, on Friday, it closed above this 101. So there's the dollar is way too strong right now. So eventually, we're going to see it pull back a little bit and possibly come back down and check these level here somewhere around 100 and the 99.5 level here. And for the crude oil did try to make it up toward this 130 level, and it kind of got stalled right here at 110, and now it's pushing back to this 102 area, this 382 retracement. So we're going to keep an eye on it. It's still, I believe the oil still got more upside potential to come up and tag this 130 level. So watch this 382 and the 50% retracement area between 102 and $94 level. And for silver did not have a very good week. It actually printed a bearish outside bar here, and we traced down to the 618 level. So although it's still inside of this zone here, but it wasn't able to get above this 2667 level last week, and see this getting rejected, and a strong pushback down to the 618 at 2411 level here. So for the coming week, we want to see would it be able to hold this zone here and see could it get back above this 382, get above the 2540 level. And if it doesn't, if it break below the 618, then we'd be watching for this thing to come back down and possibly test the 2272 area and the 22 level. And for gold also had a little bit of a pullback for the week. It came back down to this 50% level at 1929, 1930 level after it pushes back above this 1964. So it got close to the 2000 level, then it got rejected back down. So essentially for next week, we'll continue to watch to see would it get a bounce back up and get back above this 1965 level and retest this 2000 area and see could it reclaim the 2000 and push us up. Now, if it continue to pull back, then it's key to watch this 1895 level, this 1894.50 level, this 618, to see would it be able to hold the 618. And as long as it continues to chop inside of this retracement zone, then we are still looking for gold to eventually come back up and test this high and possibly get up to this high at 2113.20. So keep an eye on this 1894.50 level, 1895. Now let's take a look at the ETF for the S&P 500, the SPY. Remember we are talking about this look above and fail here. And we essentially are looking for it to retrace all the way back down to the other end of this value area. Remember, we were talking about this composite value area here on this composite profile. And you can see that it tagged the lower level here, this value area low. And today, that value area low is somewhere around 426. So we've basically been, completed the retracement of this look above and fail trace setup. Okay, so right now we want to see would it be able to come up and bounce off from this value area low at 426, or if it break below, which we most likely see that it will break below this value area and essentially push the value area low further down. Then we want to watch this 421.35, essentially this low here, and see would it be able to hold. And if it doesn't hold, then we're essentially looking for this 415.85, these low here. And if these low would not hold, then essentially we will ultimately look at this 410.64, and that is the February low. And that's the low that we are looking for to get this negative diversion between the AD line and the S&P 500. In the QQQ, the ETF for the Nasdaq 100, remember we're looking at this retracement down to this value area low, somewhere around 334, and you can see that it booked below that. So right now, we're essentially looking to see, is it going to come down and tag this low here, somewhere around 318. Okay, so that's basically what we're looking at for the coming week. Or we'll be able to come back into this value area and start make its way back up and test this composite point of control at 342.73 or basically 343 area. So that's the upside possibility, and the downside is looking at this 318. And here looking at the IWM, the Russell 2000 ETF, once again, we're essentially looking at all these look above and fail type of a trade setup, and we're basically looking for retracement back down to the value area low. And in this case, it's somewhere around this 194. You can see on Thursday, it actually broke below this level, and now it's coming down to test this low here around 191.94. So if it doesn't hold this low, then we're essentially looking for this thing to move itself down toward the 187.92, these low down here. Okay, so that's basically what we are looking at on the downside for the IWM. And for the upside, if it could get back into this value area, then look for a bounce and possibly work itself back up toward this 199, this composite point of control. Now let's take a look at Apple. Remember last week we were talking about this level here, right? We are talking about this 50% Fibonacci retracement level. And we're saying that also in addition, we're looking at this composite value area. And this is essentially a look above and fail. And we are expecting Apple to come down to the other side of this value area, which is somewhere near this 618 retracement level, near 161 level. So as you can see, on Friday, it came down to this level. Now, what we are watching now, the next thing that if it doesn't hold this level and it breaks out of this value area, then the next level to watch is essentially this trend line or this high volume node here. That will be somewhere around that 158 level. And if that doesn't hold, we expect it to come down to tag the 786, 156 area, and even possibly come down to this low volume zone here, somewhere around 154 for the coming week. So keep an eye on that. Now, if we get a bounce off of this, then look for this thing to come back up to this 50% level and see would it get rejected. Because you also could see there is a downward trend line here if you connect to couple of these high. So it could be somewhere around this 167.5 or so. So watch for these levels here, because there is a high volume node here at this 168 level here, this high volume node. So if it bounces back up, it could come up and test that level and then come back down. But again, we're essentially looking for Apple to see would it be able to find support after this trend line, or will it come down and tag this 0.78 retracement level at 156.5 or so. And the next FANG stock that we're going to look at is Tesla. And as you can see, remember we were talking about this area here for it to chop around. And this is the post-earning pop here. As you can see, on Thursday, on a regular trading session, it gave up all the gain from the pop, the post-earning pop, and pulled back to somewhere near this 1005 level. And today, it's just basically chopping around in this area. So for the coming week, continue to watch this level here, this 0.382 at 979 or 980 level. And if it breaks this retracement, this 382 retracement level, then look at this 50% retracement at 926, essentially in confluence with this trend line and also this low volume zone. Remember, we talked about this low volume zone. If it breaks and should move to this area pretty rapidly because there's not much support there, not much trading activity taking place on the way up. So coming down, there's not much of a support there. And we'll basically be watching this 926, see would it get a bounce and reject it back up toward this nice 80 level at this 382 retracement. But if it continue to fall, then look for this 618 at 873. And again, there's another low volume zone here So probably, if it come down here, then we probably will see some chop here in this high volume zone here between the 873 and 796, 797 area. So that's basically what we're going to be watching for Tesla, unless it could bounce back up. If it come down and get a nice bounce and get a push back up from the 282, from the 979, 980, then look for this high to get taken out and then come up to possibly to this low volume node here, somewhere around 1114, 1114, 1115 level. So, but if the market continue to drop, especially the S&P 500 and Nasdaq, and look for Tesla, most likely will initiate along with Apple to take the market down. Then these two stocks, Apple and Tesla, most likely also will retrace downward along with the broader market. Now here's a heat map for the Dow Jones Industrial. You see how broad the market decline was on Friday. Not a single stock in the Dow Jones 30 Industrial Index actually green. They are all have a loss, and it's all down for the day. And here for the S&P 500, there's only a few stocks we're seeing on this heat map that's actually green, and majority of them, almost 99%, I would say, probably more than that, is down for the day. We see EA, Electronic Art, Lockheed Martin, Marietta, NATO government, a couple of these defense stock, military stock, and also Twitter. Twitter is basically in play, because of Elon bid to take over the company, and that sort of thing. And then we also have Kimberly-Clark and Schlumberger, Clorox, and also Silicon Valley Bank, Silicon Valley Financial Group. So those are the few that is actually showing green along with a couple of these. So majority of the stock in the S&P 500 on Friday was down. And here's the heat map for the Nasdaq 100. Again, almost 99.9% is down. Only a couple stock is up. Likewise, looking at the Russell 2000, it was pretty ugly as well. In summary, the S&P 500 and the market continue to face more downside pressure in the coming week. We have seen a total wipeout on the downside as illustrated by the heat map, when over 90% of the stock were down. Although we are starting to see fear and bearishness from the market participants, but we still need to see those weak hands to capitulate before a near-term bottom is in. In the meantime, get your umbrella out and try not to get wet as the storm moves through the market. If you are interested in an unbiased review of the market, then click the subscribe to this channel if you are not a subscriber yet. Be sure to click the thumbs up to give it a like and help me promote this video on YouTube. Thank you for watching and stay safe.